Hey everybody, welcome back to another installment of Thursday Thoughts. I'm Alex Leonida, Chief Investment Officer at CFG Financial Planning. It's good to be back with all of you, and I'm looking forward to sharing some unbiased news and data, followed by a whole lot of biased opinion. But we're going to get to the facts first and the good stuff afterwards. If you guys haven't done so already, please don't forget to like and subscribe below. That way you won't miss any of our content. Also, a quick reminder, we just launched CFGU, which is a really cool uh, group of products that's going to have some videos, some corresponding blog posts, all based on core financial planning topics. Really good basic information to give people that base that they need to get started in their financial planning journey. Also, this week I just posted a new blog post over on incrediblethoughtsnet, and you can also get that on our website, cfgfinancialplanning.com. So check that out too. If anybody's got any questions at all this week, shoot them over to info@cfgfinancialplanning.com. All right, yeah, questions right there. Boom. Let's get into the data. We're going to start this week just like we started the last couple of weeks with the most important data out there, and that is going to be the jobs data. Yeah, once again, slightly less atrocious this week. I mean, I've seen worse. Um, the worst was the week before that, and the week before that, and the week before that, all the way back to the beginning of April. Pretty yucky. What we have here is we got the blue line. That's telling us weekly initial jobless claims. And then the gold line is going to be our continuing claims. I think it's really important to focus on the fact that a lot of states are still behind in processing their claims totals. So we don't know what these real numbers actually look like. But I can tell you this unequivocally, the numbers are not better because there is a major backlog of people trying to get some of that government cheese right now. Next Thursday, we're going to see if this rate of change continues. And if we continue to get less and less people every single week filing for unemployment, that is a good thing. That means going back to work is actually working, pardon the pun. And it is a live show, so that's how these things happen. And the key for us is going to be focusing on how quickly that rate of change normalizes, and if we can start getting people back to work, and if that work sticks after the PPP loans go away. So we'll be on top of that. We'll be all over it every single Thursday for the next couple of months. Next up, we got some good data this week on housing. We touched on this a few weeks ago. Real estate was considered an essential activity, right? So don't forget that. People were still out there selling houses during this entire lockdown period. It's not like they were government mandated to stop selling houses. So these numbers are pretty powerful. Blue line, we have existing home sales. Really, really yucky. This is only a 5-year chart. The chart got super convoluted when we went back 50 years. It was just a bunch of up and downs with one huge down here at the end. So I wanted you guys to actually be able to see the rate of change and the difference. The gold line here, we have existing home sales. So this is going to be people essentially trying to start new homes or get into new build projects, and then the sales of homes that are already built and have been around for a while. Both numbers down big time, kind of challenging and a little bit troublesome to think about when we kind of put things in a historical context of the epically low mortgage rates. Normally, that's a scenario where people are rushing to buy houses. I would wager to guess that the environment we're in is not going to get any better for home buying right now. There's a whole swath of reasons why. And actually, last week I touched on this in one of the questions from a viewer, specifically discussing residential housing. So go back and check out that video. I don't want to spend 5 or 10 minutes talking about it right now. I just wanted to point out that the new fresh data is kind of yucky. We're going to have to see what it looks like next month to see if this trend continues. Because every time that there's a decrease like this, there is a coinciding recession, and we've never actually seen a decrease quite this prolific. All right, so I'm going to jump to Next data point, one that's a little bit more obscure for folks. It's the Philly Fed Manufacturing Activity Index. I did go ahead and give you guys a monstrous chart on this one. This basically just shows growth in the manufacturing sector. The simplest way to look at it is any number above zero means there's growth. Any number below zero means there's a contraction. If you notice, almost every time there's a meaningful move below zero, boom, recession. Uh, we don't have the little gray bars up here in 2020, but I would be absolutely shocked if we don't have at least a 6 to 12 month recession based on what we're seeing with all the data. I know we've never seen government money flow in like this before, but the numbers don't lie, and these are not attractive numbers. I don't think I really need to explain to you guys how important manufacturing is to the economy. But if somebody has a question specifically about that, shoot it over to info@cfgfinancialplanning.com, and I'll try to address that in the coming weeks. All right, so you guys know the deal by now. I've been doing this for a month. We do 3 big data points normally. Occasionally, I'll weasel in a fourth, and then we jump into big news. There's a ton of stuff to talk about. I mean, it's like a constant, never-ending newsreel. But I thought I'd kind of bring everything back a little bit to some really important core topics, and we're going to talk about coronavirus first. I feel like the news isn't quite as aggressive in the coverage right now as it was a month ago, probably because people are a little more complacent, not totally freaked out. But in any event, numbers are still not great. The average daily new cases, hospitalizations, and deaths are making lower highs on 3-day rolling periods, which is good. What's not so awesome is that they're barely making lower highs, and the states have only partially reopened. We also know that infected individuals have a tendency to have to wait like, I don't know, a week or more in some cases to actually show symptoms. So the really important data is going to be coming in the next 2 weeks as the states continue to open up and people that potentially were infected actually start to show symptoms. Um, if the curve indeed flattens, that's going to be super awesome. I think that's what we're all hoping for at this point. But if not, states are going to be forced to kind of shut it down again, and it's going to be a little bit weird. So we're going to take a real close look at that. I'm not going to drop off the next couple of weeks. I'm going to stay on top of this coronavirus stuff for you guys, so you don't have to be stuck watching your cable news to get that biased information. Um, Next up, I personally think, I mean, this is my show, so I get to choose. I personally think the fact that Congress is taking a break right now, going on their vacation, is pretty important for a couple of reasons. I think I think this whole ordeal with the $3 trillion bill passing is pretty standard operating procedure. I mean, this is classic political posturing. Uh, in order to make this sound a little more newsy, here it goes. Basically, Congress takes the same week off or 10 days off every single year on Memorial Day. That's their deal. Everybody goes on vacation, they go to their vacation homes, they hang out, they do nothing, whatever. Capitol Hill is dead silent, right? Um, in this case, we had a $3 trillion stimulus bill essentially passed through the House. The Dems just shoved it through right before the break. So there was literally no way for the Senate to negotiate or argue or do any of their spiels where they talk for 10 hours about this whole deal. And the Democrats are essentially saying Republicans are lazy and they should stay and work. And then the Republicans are saying, hey, that's not fair. You knew we were going on vacation. Boo hoo. I'm not saying anybody is right or wrong in this scenario. What I am saying is this is some pretty classic political posturing. The Democrats are now stating that 90%, or excuse me, that over 50% of the population wants this bill passed. I mean, duh. About 90% of the population is going to get some sort of payment on this, right? I mean, we have anything from housing and rent, mortgage and rent forgiveness built into this bill. We have an extra $5,000 a month for any household making under 200 and something thousand dollars with a family of four, kind of averaged out. Obviously, there's phase outs to this. I haven't read the whole gazillion page bill, but the bottom line is 90% of the population is going to get something out of this. So it's pretty easy to extrapolate out the fact that over half the population is probably in favor of getting some free money, right? So the whole thing's really sad. They're just they're depressing. They're depressing to watch, depressing to deal with. Sorry, a little too much opinion, but those are fact-based numbers. 90% of the population, government cheese, 50% at least wants it, right? That's just the way it is. Next up, another political piece here. Trump. Love him. Love him or hate him? That is the question. El Presidente, he is not boring though. Okay. He might be the least boring president ever, like as in history. I mean, this guy, there's never a dull moment with him, right? So we have like one day of slow news for him, and boom, he pulls out of the Open Skies Treaty. If you're wondering why I have a picture of him and Putin up here, it's because these are the two countries that are the main pillars of the Open Skies Treaty. And the Open Skies Treaty essentially just says, hey, if you want to fly over my country, take some pictures, as long as you don't have bombs on your plane, I'm totally cool with that, right? So the idea is a little bit of transparency goes a long way. Well, the issue from Trump's perspective is Russia. They scramble their fighter jets, and they stop our planes from taking pictures over stuff that they don't want us to take pictures of. Trump doesn't like that very much, and he likes things to be, fair, right? That's his deal. At least that's his probably, I don't know, most used word, I would guess, after like huge or tremendous or bigly or something like that. He definitely says fair a lot in his speeches. But in any event, this is important news, and by all means, formulate your own opinions. Shoot an email over to info@cfgfinancialplanning.com. Let me know what you think about this whole deal. If you got a question, how it might affect geopolitical relations on a bigger scale or whatever, just shoot it my way and I'll try to get to it next week. Speaking of questions, now is the time that we do questions from viewers. We got a couple of good ones this week, as we do every week, it seems like. So here is the first one. Alex, I'm still watching the market with amazement. What is keeping the market up? And is it overpriced from a PE standpoint? So that is a really good question. PE is definitely one of the most basic ways to value a market, but still valuable in and of itself. I think what's really, really unique right now, that's a bit different than most scenarios, is we are in an environment that there is no E in the ratio for the vast majority of publicly traded companies in the United States. Um, Most companies are not making any money. If you just look at it like from a whole market cap weighted like index look, like just looking at the Nasdaq or just looking at the S&P 500, whatever, we are, if you just extrapolate out the data, we are the most expensive we've been since the tech bubble. Um, and that's kind of scary. I don't know. I don't want to say that, but I mean, things aren't cheap right now by traditional metrics. The market is driven by its largest constituents, especially in those type of indices. And uh, just so I don't have to deal with the compliance risk of the whole deal, I'm not going to say what all those companies are, but I think we all know what they are at this point. They're the big ones, the huge, the bigliest companies. They drive the market, and a lot of those companies haven't had a whole heck of a lot of their business um, messed up by the coronavirus. I mean, a lot of it's been online sales, a lot of it is techie, some of it's been healthcare related, but you guys get the gist. So the second question I have this week is, we got, all right, since people are working remotely, what do you think is going to happen to commercial real estate? Also, awesome question. We talked about residential real estate last week, and these things tie in together pretty closely. We're talking about how there's going to be a huge work from home movement, right? That's just going to happen. Um, we touched on it last week with Twitter. Again, not a recommendation to buy or sell. But Jack Dorsey told his employees, "Hey, cool, you guys are doing a great job. Stay at home forever. I don't care." Right? So on that end of the spectrum, there's going to be a lot of companies that don't need office space anymore. They just won't need it. On the flip side, if you're going to be living and working in the new norms, as they call them, there's going to be some form of social distancing in the future. We're going to have to go back to like the 70s and 80s. And what I mean by that is there were about 3 workers per 1,000 square feet of office space back in the 80s. And now, I guess at the end of 2019, there was about 6.5 workers per 1,000 square feet. There was like that whole huge drive for everybody to work together, communal working space, shared working space, one giant long table that's like 30 feet long in the middle with like a gazillion computers on it, and everybody hung out and talked to each other. And it was like, I don't know, that was a thing for, I don't know, the last 10 years or so, and getting increasingly more popular. Well, you can't do that anymore. You can't sit right next to your coworker and high five each other every time you make a sale, because that is not allowed. Social distancing, people. All right. So we're going to get back to cubicles. There's going to be more space needed, et cetera. So I can't tell you what the demand's going to look like in total square footage, because there's going to be fewer bodies per square foot. That's just the nature of the beast. The other thing that's really, really interesting about this is there is a massive rush to get away from elevators. Elevators. People don't want to be crammed in elevators going up 30 or 40 floors trying to get to their office space, right? So we've already started to see a little bit of a demand pickup in suburban real estate, commercial real estate. You know, those office parks that have like 2, 3, 4, 5 story buildings that are really, really wide and not really, really tall. Um, that's something that's becoming increasingly more popular, and something we're gonna keep a close eye on. There's a lot of talk on what it's going to do in terms of rents and profit margin, et cetera. But those are my thoughts at this point. I don't have anything definitive. Those are just the things to think about. But great question. So thank you so much for that. Um, all right, everybody's favorite part of the video. I don't know if it's everybody's, but it's mine. It's my final thought. Um, all right, so maybe I did you guys a disservice last week when I talked about inflation. I may have lied, like unintentionally, right? I guess it was sort of a lie when I was saying we don't really have inflation. Because by and large, a lot of stuff has deflated, right? I mean, we talked about airfares last week and oil prices, gasoline, whatever. Bunch of stuff has gotten super duper cheap because there's been zero demand for it. None. Um, but I had an experience this week. I did. I had an experience. Um, I went to the grocery store, and I try not to go more than once a week because the powers that be say, hey, don't go, right? I went to the grocery store, and enter toilet paper or bath tissue or bum wad, as they call it overseas, across the pond, or a bog roll, or I guess the other thing we like to call it is teepee here in America because we're so mature. That's why the rest of the world loves us so much, because we say stuff like that. Um, but I guess the first question you're probably going to be asking yourself, like, whoa, Alex, you're 3 months late on the toilet paper thing. That's really cool. By the way, Costco sold out of toilet paper in the end of February. Cool, dude. No, I'm not late. I know people were hoarding. Everybody in America knows that it was hard to get toilet paper. All right. Everything was relatively normal when I went to the grocery store this week. Pretty basic, right? Standard operating procedure, except for there were some freshly installed automatic doors. There was kind of a weird lack of meat selection, which we'll chat about in just a minute. And probably the weirdest thing is there was toilet paper in stock. Yeah, there was some on the shelves. So I figured, hey, what the heck, right? Might as well take advantage of this situation. So I went for the 4 pack of Charmin. I mean, they didn't have the like 24 pack or 30 pack, um, but I went for the 4 pack of Charmin. I was brainwashed by my mom. Just full disclosure that this is the only toilet paper I will ever buy. Um, but that's a story for another day. And due to this cognitive bias that I had, uh, I kind of ignored the price of the toilet paper. I saw it, but I didn't really care because I was like, I haven't seen Charmin in like a month, right? So I bought it. But when I say kind of, I mean there was a storm raging in my soul, just raging. Check this out: 11.99 for a 4 pack of toilet paper. Okay. When I got in my car, I mean, I felt pretty good about the whole deal. I was like, hey, this is cool. I got some toilet paper. I got a bunch of stuff that I wanted. Yeah, yeah, yeah. And then I got kind of mad and I was like, wow, this is how they feel in Argentina when they got to pay 500 pesos for a loaf of bread, you know? Like, this is like highway robbery. It's the worst. Um, I mean, so I sat down and I thought about it for a second. That's actually when I came up with the idea for the final thought this week. And the answer to the question, how did we get here, is simpler than you might think. This is like macro 101, the most basic thing that you've ever thought of when you think about economics. And it's supply and demand. I mean, there's no way around it. It is supply and demand. Um, I did some digging. I started doing research on the toilet paper industry, some of the companies that make it, how fast they make it, how much it costs to make it, the whole deal. Bottom line is it's divided into two really well-oiled machines that share no parts. Okay? All right, on one side, you have commercial toilet paper, which is kind of bad quality. I mean, let's be honest, it's pretty bad. It's real bad. It's also really, really cheap to make, and it's really easy to deliver in bulk, right? The way they package it, they can put a gazillion rolls of toilet paper on a truck, boom, out of there, super cheap. On the flip side, you have residential toilet paper, much, much higher in quality, quite a bit more expensive to make, and it's not as easy or as cheap to deliver. I mean, it's kind of similar to milk and produce, right? They send out the raw supplies to the restaurants and hotels, but there has to be like pasteurized finished products packaged properly and like small packaging, etc., for the residential side. And the other crazy part is the supply chains of both are not even remotely interconnected or interchangeable. I mean, what the heck, man? I So we're in a situation where there are tens of millions of rolls of toilet paper available for hotels and restaurants and whatever, and there's none for us to use in our house when everybody's stuck in their house. So that's how we got to where we're at. I mean, margins are razor thin on this stuff. Anything that's as cheap as toilet paper, I mean, the margin's going to be small, and the industry has the propensity to make just enough every year, right? We had for the last 2 months, month over month, we had monthly sales up over 70% on a year over year basis for 2 consecutive months. I mean, that is a massive increase, right? Boom, cost increases. There is no way that they can create enough supply to equalize with the demand. Just you can't. There's no way to do it. Can't do it. I mean, we all know. I don't know if you guys have seen this stuff, but there's been reports of price gouging on everything out there. There was this crazy dude in Tennessee who bought 17,000 bottles of hand sanitizer and tried to sell it for a profit, huge profits. Like that stuff's obviously illegal. Um, but when you're in a situation like this, true nationwide supply demand crises, they allow for reasonable price increases. I mean, they have to work their way into the system somehow. How else are you going to naturally and organically reduce demand and hoarding, right? Like things have to get more expensive. The same thing's happening in the meat industry. Like I alluded to this a couple of minutes ago, but the whole thing has been really, really interesting to watch. I mean, the nature of the working conditions and the marginal sanitation practices in pork and beef processing plants has kind of lent itself to really, really bad COVID outbreaks. Like it's been depressing. We have plenty of hogs, we have plenty of cattle. Everybody's like fat and ready to go, but we don't have people to process the food, right? So we're in a situation where we're all trying to eat at home. We're trying to get access to all the same things. And then we have that key part of the supply chain that is being strangled off because they can't go to work because everybody's getting sick. That's why Trump made it so everybody had to go back to work in those industries. And people got even sicker. I mean, I don't know what's good and what's bad here. I mean, we got to eat, right? At the same time, people got to be safe. I don't really know. But what we're dealing with is we're dealing with crazy inflation, right? It's just not the stuff that you traditionally think about. Um, I mean, think about this. Every time there's a drought in South America, coffee prices spike. Every time you get a drought in the Midwest, boom, soybean prices through the roof, which works its way through the supply chain in like a million different ways. The list goes on and on. But the bottom line is that we as Americans, we take things for granted. If you didn't live through inflation in like the 70s, these crazy price swings are foreign to you. I mean, Lord knows they're foreign to me. At this point, I think all we can do is just pray that the government doesn't overshoot with the stimulus. Uh, if they print money, just using kind of an overused phrase, but if they print money to the point where it's out of control and we actually see real inflation come back throughout the economy, it's going to be weird. I mean, you're going to be really, really happy that you locked in that super low mortgage rate during this disaster. Um, but in any event, I started going down a rabbit hole here. I'm going to reel this whole thing back in. Um, I learned something this week, and that's the important part, right? It's okay for you and for me, especially for me, because I can't speak for you. It's okay not to be a toilet paper snob, but I'm probably still gonna keep buying Charmin. The next time I see it, I'm gonna go buy it again. I don't care how much it costs. Thank you, Mom. I appreciate that. All right, guys. Well, thank you so much for watching. I love doing these, sharing what's going on in this bald head of mine. If this was your first time, please like and subscribe, which right down here. Ooh, I got it right on the first try this time, huh? Like and subscribe. If you got any questions at all for me, shoot them over to info@cfgfinancialplanning.com. I hope every single one of you have a super safe and happy Memorial Day weekend. And until next time, cheers.